Hello and welcome to The Trade. Well, let's get across the key charts with a focus on stocks. To report this week, we are joined by Hebe Chen from Vantage Markets. Hebe, welcome back to you with a look at three stocks, two locally and one on Wall Street, being the biggest of them all, Nvidia. Let's start at that point because it's actually due to report Thursday morning our time. We did see it come off overnight, perhaps investors positioning themselves ahead of that report. What are you seeing on the chart though?
Yeah, good morning, Andrew. Yes, definitely. We have a massive weekend. Nvidia is definitely one of the key topics the market's been watching for. I think that, as that Chris just mentioned, I think the ending for Nvidia is always a good time to seeing that the volatility and what's the expectation. And often that doesn't mean that always a positive earnings will directly translate into a positive response from the share prices. And as I'm putting up a chart here, they're putting up the vertical line. I noticed a pattern that for the past four earnings, the past 4 quarters, the Nvidias tend to soften immediately after earnings before recovering again several days later. I think that's not more about the mindset for the investor. It's not about how well they have performed, but what's next for the Nvidia. For the technically, I will see that near-term picture has weakened with the stock prices seems to breaking below its short-term ascending channel. The first support I'm seeing is sits roughly about 207 to 213. That's where the 20 days moving average and the recent price gap are located. But the longer-term picture, I do think that for the bigger picture-wise, the most important point here is that longer-term uptrend still holds, supported by the broader channel and the medium to longer-term moving averages. The key watch, I think, after this earnings, I was seeing that is $200. I think this is the key line in the sand. A convincing breaking below the level would start to challenge the longer term view, but if the prices can continue to support above the 200, I think the longer term chance will still impacting for the expectation for the Nvidia share prices. Momentum wise, we do see the KDJ also move towards oversold area, suggesting the deep buyers are not far away. So overall, I'm still seeing the near term volatilities. Post earnings remains pretty much likely, but I think the longer term bullish structure still holds for now.
Hebe, let's turn then to a couple of key results locally this week. Qantas due to report. Interesting, of course, given it's in the travel sector, it's influenced by those movements in the oil price and also what's going on as far as international travel is concerned.
Yes, exactly. I think for Qantas, the story is a bit tricky. While we expect the earnings, but I think that the impact from the upcoming earnings will be probably limited because as you mentioned, the travel stock still quite highly depends on the oil prices movement. That's why I'm putting up the purple line here, which is showing that the Qantas share price is actually pretty much mirror in the opposite way of the oil prices movement. Every time the oil prices pick up is the time that we do seeing the Qantas prices feel the pressure. So I think this upcoming earnings will be more of a fundamental health check rather than a short-term trading catalyst that has a potential to reverse or making a pivot point for Qantas. From the technical wise, that I do think the sellers are quite still firmly in control. The stock has broken below its ascending channel, falling beneath its order moving averages, and now testing the 890 support at the moment. If that level breaks, I think the next downside area will be roughly about 840 to 850, followed by the broader bottom of this 2026, which is near $8, and that's quite likely that if oil price stay elevated and the geopolitical tension remains quite cloudy and uncertain. The only early positive I'm seeing is KDJ also is beginning to turning higher from deeply oversold territory, which means that once the order does settle, it could be the time that we're seeing that the Qantas will bounce back from that level, but still highly depends on the external environment rather than just the Qantas performance, in my view.
And Hebe, let's turn to consumer staples. We've got Coles in play today reporting, but Woolies is also reporting this week. If you look at the chart, certainly it's been an uptrend over the past 12 months. What's ahead though, as far as what you're seeing on the chart?
Well, yes, this year is actually probably one of the best years for Woolworths for the past 3 years, struggling. As you should say, that the Woolworths price has been up about 31% so far this year and 58% from last October. So I think these earnings will be even much more critical for Woolworths because this is coming to a time that the price start to pull back a little bit. So if that Woolworths could deliver a positive result, that could be a potential point to stop the bleeding, the recent bleeding. and bring that back, the recent high at 40 to 41 back in view. On the other hand, I do think that 38 level is an immediate line in the set at the moment. If that holds after earnings, I think the stock do have the chance, as I said, to re-challenge the previous peak, 40 to 41. As you can see from the chart here, the price has been trying to conquer this level for multiple times since June, but still yet to breaking through the level. But if the 38 gives away, I think the attention will shift back to 36 to 37, and further down there will be 200-day moving average. If that level breaks, that means that the momentum for Woolworths starting from last October to today will be definitely under a risk. On the other hand, momentum still is now moving into oversold, which means a positive earnings catalyst could have an amplified impact for Woolworths. So overall, I think the longer term still holds, but these earnings definitely have the potential to be a make it or break it moment for Woolworths.
Hebe, great to get across three key charts in the equity market. Thanks for joining us in Vantage Markets. And that is the trade.